what we're seeing right now, wait times. So wait times have become a very critical event at some of these facilities. You've got issues being compounded with, you've got the obvious upswing in volume, and then you have workforce reductions as well. So I found a really interesting, it's called Rate Per Mile Masters. It's on Facebook, and it's a group of supply chain professionals, and they're sharing a lot of videos of some struggles that they're having at facilities. They're sharing a lot of market level information, so it might be worth checking out. Wait times at facilities are up just under 14% in the past month. Overall average in the U.S. is 159 minutes. Atlanta, 277 minutes. Oklahoma City, 297 minutes. And Philly, 322 minutes. And that's only being measured from in-gate times, too. So it doesn't even factor in the time it's taking for truckers to get into the physical yards. So the Atlanta and Oklahoma City stuff kind of sparked some curiosity with me. You've got those two areas there that have an awful lot of employees in biotech and healthcare. Obviously in Atlanta, that's where the CDC is headquartered. And some of their largest employers there are Walmart, Home Depot, Kroger, Publix. So it kind of made sense. The Oklahoma City, to be perfectly candid, did not know that was a big biotech hub. So that was interesting to find out. Some other stats that we're seeing, ocean freight rates remained relatively flat to last week. Last week there was a spike, and that's kind of coinciding with China ramping back up. So the estimates that I'm seeing is that they're at about 70% capacity right now, so trending in the right direction. Domestically here in the States, you've got dry van spot rates up 6% week on week. That dry van load to truck ratio is up 11% week on week. Reefer spot rates are up 7.5% week on week, and the reefer load to truck ratio is up 26% week on week. DAT also released the top 100 lanes in terms of volumes and what they're seeing with all the data that's flowing through them. So 63 lanes out of that top 100 showed cost increases, and this is week on week. 32 stayed the same, and 5 actually showed a reduction week on week. One positive, at least it's helping some of the cost mitigation, is diesel dropped yet again. That makes 12 straight weeks. It's at 265.9, the U.S. on-highway diesel national average right now. So that's helping contain some of the costs that are out there. The other things, some of the things that we're seeing is that the LTL carriers are outperforming the truckload carriers in terms of consistency. So obviously in the truckload space, I think we're all feeling the pain of carriers being able to charge more money and taking advantage of that. Not that it's not a real thing. But Landair, for example, small regional LTL carrier here in the Northeast, they announced that they're suspending their GRI for the foreseeable future. All of the other major carriers that I'm in conversations with are operating business as usual. So yes, they're feeling some of the crunch with employees maybe calling out, but all in all, things continue to operate, again, a lot more consistently in that LTL space than what we're seeing in the truckload space. Last week, we had talked a little bit about potentially the FMCSA granting waivers for expiring licenses, and they've actually done that, which is a good thing. So that's going to run through June 30th. That'll make it easier for drivers to not have to go through the renewal process. Canada also granted some similar hours of service exemptions, similar to what we see in the U.S. So the legislation itself at a very high level is eerily similar. Canada has a few more restrictions than we have here in the U.S., but they've granted some similar breaks there to help with trade there as well. You know, one thing that we're consistently talking about here with our clients and just with shippers in general is now more than ever, giving enough lead time to your carriers is going to be absolutely critical. So, you know, typically we could all get away with hey, 48 hours is perfect. And in some cases, carriers could respond within 24 hours. It's coming to the point now where that 48 hours may not be enough. And we're also hearing from some of our broker partners out there that the underlying assets are being scooped up by government organizations to help deliver emergency supplies. So that's not really a surprise, and it's a trend that I think we can all reasonably expect to continue. Some news on the air freight side. So for the first time in 36 years, American Airlines is actually operating its first cargo-only flight. So that's obviously pretty significant news. We all know about all the passenger flights that have been cut. IATA just estimated a $250 billion loss to the airlines if these travel restrictions remain in place for at least 3 months. That's $250 billion with a B. So Delta and United recently estimating they have, between the two of them, about 100,000 more employees than they really need. And Delta is estimating that they're spending $50 million per day to keep staff intact. So these are obviously some pretty trying times for all of us. That's about all I wanted to cover from just a market standpoint.